Yeah, morning, Trace. We're just seeing US cash markets closing for the day. Obviously, a bit of a holding pattern ahead of that CPI print in the session ahead in the US. But if you have a look at S&P futures and look at the sort of totality of the move that we've been seeing, we've seen the market trade in a high-low range of 66 points, which is a decent amount there for the day traders to work with. The 5-day average is around about 61 points and the year-to-date average is around 50 points. So reasonable range there for coming through. And we've seen 1.57 million S&P futures traded hands, which is above the sort of 30-day average that we've been seeing. If we have a look at the cash market, S&P, we opened on a fairly tepid note. We traded down on the open about 80 basis points or so, in line with what we've been seeing with European equity markets, which were heavy on the day. Certainly the DAX was down 1.3%. That was the underperformer there. Euro stocks down 1.1%. And US cash markets feeding a little bit from that. And we saw the market trade down to 51.60 in the cash. We did see buying support kicking back in. If you have a look at the intraday tape, we moved a little bit higher, then we sort of consolidated for a large portion of the trading session. We sort of traded sideways before a nice move up into the close where we closed at 52.09, up 0.1%. NASDAQ a little bit more of an outperformer there, closing up 40 basis points. And on the small cap side, the Russell was up 30 basis points as well. And we have a look at the sectors and the styles within the S&P to give us a sense of how that may feed through into Asia. We did see value working very nicely. The S&P value index was up 1%. On the back foot, though, we did see cyclicals underperforming and also high quality names under a bit of pressure. That's a high quality index down 0.6%. I think probably Nvidia closing down 2% was behind that sort of move. But generally speaking, there's been decent breadth playing through. 66% of stocks on the S&P were higher on the day. REITs led the charge. They're up 1.3%. Utilities, staples also working pretty well. And it was financials that was at the bottom of the pile, as you can see from the day's sector performance playing through. So a bit of a defensive day, as you'd imagine, get ahead of that CPI print. And if you go into fixed income, we did see good buying playing across the curve. Sort of 2s to 30s rallied about 5 basis points on the day. We've seen real rates down about 3 basis points. Now, we did see a slightly tepid 3-year bond auction. We've got a 10-year bond auction in the session ahead, but obviously the big focus is going to be on CPI. In the FX markets, we've seen the South African rand, the star performer on the day. That's been working quite nicely. The dollars, well, the DIX is pretty much unchanged because euro dollar is not really seeing much on a percentage basis move today. We've seen good buying in the Aussie dollar. We've seen that trade up to 66.44, testing those March highs. Probably taking a little bit from what we've been seeing in the commodity complex. You've got copper trading at $4.30 a pound at the moment. Dalian iron ore trading up 1.8% in the night session there. So obviously a good lead in there for some of the material names. And gold prices up 60 basis points as I speak. Yeah, we've got gold prices now at 23.52. Crude prices have taken a bit of a back seat. We've seen a bit of profit taking there. The market's down about 1.4% as I speak at the moment. Now, as we look ahead at the session that will be, we are expecting the ASX to open about 40 basis points higher. That market looks like it's going to benefit from the value outperformance that we've been seeing. The Nikkei probably under a bit of pressure. We're expecting that market to be down about 30 basis points. Also, the Hang Seng up 0.4%. But it's going to be a big session ahead. There's plenty of event risk to navigate. In New Zealand, you've got a Kiwi rate decision coming through at midday Eastern Standard Time. The market's not really expecting any kind of change today. Probably more about the outlook. We've got about 58 basis points of cuts being priced in, or nearly just over 2 rate cuts being priced in by the end of the year. So obviously the statement needs to reflect that. We've also got the Bank of Canada meeting playing through in US trade. We are expecting no change there. Again, the market's not really pricing anything for this meeting. We've got 75 basis points of cuts being priced into Canadian rates. So 3 rate cuts being priced in by the end of the year. So again, will that statement marry up to that? And of course, then we've got the CPI print in the US. The market's expecting 0.3%, to come through month on month for both headline and the core number as well. Obviously, the internals matter. What's happening with services and also with goods inflation as well is going to be very important there. But if we have a look at US rates at the moment, we've got about 60% chance being priced into OIS for a June cut. So obviously that CPI print is going to be impact that quite readily playing through. And we've got about 66 basis points of cuts being priced into US rates by the end of the year, so 2.6 rate cuts as well. So depending on the outcome of the CPI print, we could see some decent rates vol playing through, and obviously that could spill over into FX markets as well.